Members, welcome back. Today we're going to review the 200 EMA strategy. I use this in a long-term perspective over a 6 to 12 month range, combining volume, RSI, and previous support levels. So the first thing I do is you can see Google we're using, for example. Highlighted by this example, you have the 1 year chart up where we are looking for previous levels of support. This green line is your 200 EMA. I'm going to make this a little bit thicker just for you guys to see. Going by the line thickness, it just allows us to see where the 200 EMA is revolving around. And now, when I am making these types of swing trades, I am looking for areas of support. So I'm looking for reference in February of 2025, Google was selling off and it broke this 200 EMA. And a good way to look at it is most of the time it will retest the EMA and then reject. But that doesn't mean I want to make my entry here. It is just a point of contention showing that the 200 EMA is well respected where these green candles got rejected and Google started moving lower. Now, where would I buy on this? So the first thing I have to do is look for areas where I see previous support. Looking at the target here, we can see at this range at $150 per share, there was a touch of Google showing support. So looking back into previous, I started mapping this out here and then waiting for Google to reach anywhere from about 145 to 150. Making these levels of support will help me combine the volume, the RSI, and using multiple time frames to confirm my analysis. So now I'm going to zoom in on the chart a little bit further so we can see. And the first thing we are going to focus on is the volume. So as we see volume and it starts to sell off, we will notice that there are many candles mixed in. But right from here, about March, where it was trading about $185 per share, you had very large red candles come in, proving that this was high selling pressure and the red volume bars started to increase. I was waiting for some green volume to come in, which never came, so I decided not to make the trade. Even though the RSI at this position, if you look down here, I'm going to make this a little bit bigger for us to see. The RSI was trading at about 30, which is indicated right here on the left side. So when you are trading the RSI, you have to combine the volume and the RSI as well as looking at previous support. So 3 factors: volume, the candles, RSI, and you are looking for previous support, as well as looking at news of the stock. Now that we know over here 150 down to 147.5 is an area of support, I'm going to now zoom in down to this range so we can get more specific. This is where my entry was because I was waiting for an entry near previous support, which was around $145 per share. When you make your entry, you are combining volume, which here is your first green big volume candle to come in. You have multiple little green ones, but notice that they are followed by consecutive red volume coming in. You also want to focus on the RSI. The RSI on the 1 year chart on this specific location was 28. But how do you know that it was a good buy? What you need to do is follow a stop loss. So anything giving 1 to 3% would be your risk management. So if you were to buy Google at $145, you'd want to risk, let's say 3%. This is a swing trade, 3 to 5% to make 10 to 20%. When you're trading swing trades, you need to have more flexibility in your range because you are holding longer term over maybe months to make this trade. This entry around 145 and me selling back up at 166 nets me over 10 to 15% on this gain, risking only 3%. So the first thing that I like to look for is combining the previous support with the previous support around 145. It sold off to about 142. Seeing that we had divergence in the RSI, where I'm going to show you right here, where you can see that the two RSIs here were a little bit elevated. This was trading at 27 right here, 28 right here, and then right at this point we are trading 28 back up to 47, indicating a move higher. And you can combine all of this RSI information with your volume candles. So look at the green volume coming in, and not just the size of the bar. Focus on the actual volume number. So during this time in April, your selling pressure right in this candle, even though it's selling off, was only 25 million versus this one was 46 million, showing increase in red. Then 62 million getting flushed out. Then the buyers came in, and look at the buyers, 76 million topping the previous two candles, showing buying pressure is starting to come in. Then following the next volume candle, 76 down to 52 million. Now you had 70 million, proven that this is starting to reverse. A good indicator when trading a 200 EMA is to watch what it does the first time it breaks. So what I like to do, so I don't buy early, is some people will buy right under the EMA because they think it's going to retest it. But that test is only good sometimes for a few points. Look at this example of Google being 166, then pushing back up to 172, proven that it is moving more to the downside. When I buy a swing trade, I am looking to have it well off. I'm just going to draw a line so you can see how well off this was. So the EMA was at 173. It rejected this 173 range, and then it sold all the way off down to 140. There's a big difference when you're trading an EMA and you're trying to combine volume, RSI, and all those previous resistance. Usually, if it's a big cap stock, you can find that it likes to retrace eventually back to the EMA. But this was a move from April all the way to about May 23rd. So this is a 2-month hold to get 140 back up to 168, which is a nice percentage increase if you were to make that purchase. So remember the key factors. You want to focus on previous support levels. When you're focusing on previous support levels, you are looking on the 1-year or even the 2-year chart to find where has Google had support in the past. Right here was a clear point of contention. Right here is a clear point of contention where you would start considering making this entry and noticing that it is holding. Then when it starts moving up, you want to confirm the volume, the RSI at that time, and you can see the divergence here of 28 and then up to 38, moving higher direction, not making as higher lows. So even with this, when you were combining your trade and your trade idea, right there was where our second initial support area, and then you have noticed right here as well, it was a higher low. That is what you are trying to focus when you are trading the 200 EMA. If you zoom out always on a 2-year chart and it's a bullish stock, you will notice that the 200 EMA usually acts as a point of support. Look at these multiple support ranges that you are seeing. People like to buy, investors like to buy the uptrend. Right there is one area of support. Now looking at the next area, you can see right here is another area of support, bouncing right off of that support level. The 200 EMA is an excellent guide to show where areas of support are. I just wanted to highlight this with these ovals so you could see. And here is one more spot where you had this support, right in this range right there. And then once it breaks, then you start to have your weakness. So I hope this helps you. Please leave a comment in the section below if you have any questions, and I look forward to hearing from you.